Hello, welcome to the Invest in Value channel. I am Victor, and today I'd like to talk to you about CareTrust, which is a real estate investment trust. If you're looking in 2022 for a company that's going to see its stock price go up and pay you a really nice dividend, then you ought to watch this video. Before I analyze CareTrust, do me a big favor and click that like button. Consider subscribing to my channel and hit that bell to receive notifications when I release new videos. So CareTrust is a company that I've reviewed for 2 years. I've invested during that time. I invested a few years ago, saw my stock price, go up. I sold at a gain. And then more recently, the stock price has come down, and it's made this company attractive to me, and I've reinvested. They basically serve the older population by providing facilities where people can receive assisted living. They could have during times when they need medical care, skilled nursing facilities. They can stay there. And then they have campuses where people can have a more independent experience, and they can live at a CareTrust property. Taking a look at where CareTrust is traded over the last 5 years, you can see that they've had their stock price go up and down quite a bit. I actually like companies like this because it gives me an opportunity to buy the stock at a good price and then watch it go up, which is what I did in 2020. I believe this space, whether we're in a recession or in a time of growth, older people need facilities like these. They're needed. I think there was a lot of scare when COVID hit that these facilities were kind of like the center of most of the deaths and so forth of COVID, which at the very beginning kind of seemed like that was the case. But what ended up happening was that CareTrust, their quality is very high. It ended up, they operated very well during COVID. It was a great time to buy the stock and see it rise. It rose so much that it kind of became, the price was higher than where I felt the company was valued, and I sold, and I got a good gain. And then I continued to pay attention to the company, and then bought again more recently on this dip. So I'm up on the stock maybe 5%, and the company pays a nice dividend of 5.84%. PE ratio of 25.32. Not bad for a company that's going to have consistent, revenue growth, consistent profit, consistent cash flows, and pay a nice dividend. Market cap is 1.86 billion. Not too high. Nice little company that is operated very well. All right, so now let's take a look at what the intrinsic value of this company is, and potentially what type of discount we'd be getting if we bought a share of CTRE. So I took a couple of inputs into the model. I used a 7% discount rate. Interest rates are going up, so my discount rate is going up to compensate for the higher interest rates. I used a growth rate of 10%, in years 1 through 5, and then 4% for long-term growth. The company has, over the last 4 years, has grown at 10%, and they've grown free cash flows by 23% over the last 4 years. So the growth is there. These guys are adding properties to their overall portfolio, so they should grow in 2022 and in the next 5 years. Their free cash flow for 2021 was 151 million. So putting that into my model, I got an intrinsic value for the entire company of 2.539 billion. The company has a market cap of 1.86 billion. So there is a delta between the intrinsic value that I've calculated and the market cap of the company. There's 97 million shares outstanding. So if I take that and divide the intrinsic value by the number of shares, I get $26.16 per share of intrinsic value. The current share price is $18.83. So there is a 39% discount on this share price. So you can conceivably buy a share or buy shares at a 39% discount and see some modest appreciation of this stock. This is a year of a lot of volatility. 2022 is showing us that, hey, we could be down 10, 20% this year at the end, or I should say the S&P could be down 10, 20% this year. Having a REIT could help you counter that volatility and have a consistent company that has a product and service that is needed no matter if we are in recession or not. Older people will need these facilities and they will pay for the service, and this REIT will have solid revenues, solid profit, and solid free cash flows. Well, let me provide a recap of CTRE. Their performance last year was very solid, 8% year-over-year growth following a year of COVID. And for healthcare providers, healthcare facilities, I mean, my hat's off to them. They're really important to get us out of this pandemic. And CTRE really performed well. Big thanks to their employees and their leadership. Over the last 4 years, they've grown at 10%. So they've been a solid grower in a profitable way, paying a nice dividend. Their free cash flow was $151 million. They grew free cash flows 23% over the past 4 years. Great to see. And they collected 100% of their rents in 2021. They paid a really nice dividend of 5.84% and have a PE of 25.32. Guidance for 2022, their leadership doesn't provide specific guidance, but they do talk about how they want to consistently grow, remain profitable, and generate free cash flow. They bought 2 facilities recently, which is going to increase their capacity and help them grow in 2022. They have an earnings call on May 4th, 2022, which will be very interesting to see how they operated in the first quarter of 2022. My outlook is, in a very volatile market that we are in 2022, the S&P may end up being negative, significantly negative this year. We may be negative 10, negative 20% at the end of the year. So I really like CTRE because they are a stable company. Healthcare is needed, whether we are in recession or not. When people need healthcare, they go get it. And older people tend to need more healthcare, and they need facilities like these. So I believe this company will continue to grow, pay their dividend, and this will be, a likely company that beats the S&P by a pretty good margin. This stock, the proposition for this stock is that you can have some modest upside on the price. You can see your investment appreciate with regard to price gains, and you can have a nice dividend while you hold this stock. Please keep in mind that my videos are only for entertainment purposes only. They're not recommendations to buy or sell a stock or security. Please consult a professional if you feel like you need some advice, and weigh your investment decisions carefully. Thank you so much for watching my video. I really appreciate it. Please do me a giant favor and hit the like button on my video. Consider subscribing and hit that bell if you'd like to be notified when I produce a new video. Good luck in investing in 2022, and I'll see you on the next video.